The U.S. economy added 200,000 jobs and wages rose the most since the recession. The strength in the labor market reinforces the Fed's plan to raise rates 3 times this year. So could we say now that the Phillips curve is making a comeback?
Well, I think it's a little too early to jump to that. I believe in the Phillips curve, but I think the wage data can be pretty noisy month to month. That said, there were some pretty interesting back revisions to wages in December, November. So now the trend does look like it's been pretty steadily but slowly accelerating since 2014 or 15. So we do think wages are picking up, and hopefully they continue to do that as the year goes on.
Any signs that they will, though, Michael?
Signs that the wages will pick up.
Yes.
Again, we saw some of that in the last couple of months. The ECI over the past second half of the year started to firm, the employment cost index, which we got earlier in the week. So I do think there's more evidence that these tight labor markets are starting to gain some traction with wage growth.
Does it worry you that this time around the numbers were also affected by a shorter work week?
So the two may actually be related because the weather around the reference week was actually colder than normal. There were some storms that may have held down hours worked, but also pushed up average hourly earnings. So those two may be a little bit distorted by the weather. That's why I said you don't want to jump too much on 1 month's reading. But we have seen this trend picking up over the past couple of months.
And labor force participation is stagnant. Is that a good thing for inflation?
Stagnant against a backdrop in which we think that demographic factors should be pushing it down over time. So this, I think, reflects, again, some of the cyclical strength in the labor market, the fact that it's stable. So the labor market may be actually pulling in more people than we would have otherwise expected, given how strong job growth is and the fact that wages are picking up. So stable in this world is actually, we think, a good thing.
And that good thing will translate to a March Fed rate hike.
We feel pretty confident that that is going to happen. Certainly, we thought the statement earlier this week was a little bit hawkish, pointing in that direction. So we think March, I don't want to say a done deal, but looks as close to a done deal as we think, as you can say right now. And then we actually look for 4 hikes this year, and I know the Fed's looking for 3. I don't know if come the March meeting they revise their dots up at the March meeting or later in the year, but we do think we don't see a whole lot in this economy right now that's going to slow the Fed from hiking once a quarter.